Hello and welcome to this Monday's weekly market briefing. We've got lots to talk about, but firstly, US says strikes against Iran-backed militias are beginning, not the end, as well as that Bank of Japan grows more confident about imminent exit from negative rates. Boeing in last chance saloon warns Emirates head. We've got lots to talk about on the charts also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you see that. Before we get straight into it, make sure to subscribe. But the first article to talk about, of course, is in relation to the US. Now, the US has now doubled down on its recent strikes against Iranian-backed militia groups, with National Security Advisor Jake Sullivan saying the strikes were just the beginning, not the end. Now, obviously, we've been talking a lot about the tensions within the Middle East, and that's, obvious to kind of most why we're talking about that. And it's mainly because it greatly affects markets on numerous levels. Not only is it affecting US equities on the fact of how, for example, shipping lanes are being shut down and how that's affecting certain production lines for automobile companies within Europe, but also on, in relation to, let's say, gold, which is heavily dependent on world tensions because it is a safe haven asset. So when we are in these times of, high world tensions, we will see assets like gold, like oil, move to the upside. And that's why it's important to understand what's going on in regards to geopolitics and that sort of thing. Because if, as we've spoken about many times, if this does escalate into a regional war, it expand itself from the kind of Israel-Hamas war which it is at the moment. If this does start to see nations such as the US, Saudi Arabia or Iran get involved directly, we could be seeing the price of oil skyrocket, and this would dramatically change the economies of the world. Not only has the world been struggling, or at least the West has been struggling greatly with inflation recently, but a sudden rise in oil's price would make that even worse, and drive oil's price to even 150 is what we've spoken about before, $150 a barrel, which is near double what the current price of oil is at the moment. So you can just imagine how that might affect international markets around the world, and that's why it's so important to understand what's going on. Not only that, but of course these kind of conflicts do affect certain industries more than others. Of course, it affects defense industries greatly, but also it affects other industries around the world, and that's why it's so important to understand how things are going and what might happen next. But ultimately, when we've been talking about the Middle East at the moment in regards to world tensions, we've mainly been talking about the Israel-Hamas war, which has obviously started following the October the 7th massacres. Now, since then, we've obviously seen an air, naval and ground campaign into the Gaza Strip, and this has kind of seen international recognition for certain things. Well, in regards to certain nations condemning Israel going into Gaza, with other nations backing and supporting Israel's efforts within Gaza, and that's kind of seen a world split almost, with many nations allying themselves with the kind of Hamas militant groups or just Palestinians as a whole, whilst the US and UK and certain other allies have been quick to ally themselves with Israel. And this is kind of built on the kind of geopolitical tensions which have already existed within the Middle East for a very long time, and that's why it's very important to understand what's going on and seeing how things are playing out. But of course, most recently, the Houthis attacking commercial ships within the Gulf of Aden and Red Sea has dramatically affected world tensions, and this is because it's largely affected the US and UK and European allies more than we've seen before within this conflict in relation to Israel and Hamas, because ultimately it did start to affect international shipping routes which were on their way to Europe. And most recently we did see, of course, a British-owned vessel be hit by a Houthi missile and force the crew of such vessel to abandon ship, basically. And this kind of caused some tensions itself, because many then started to worry how this might then bring Britain further into the conflict. But ultimately, we've only seen airstrikes from the US and UK so far, and it does seem like that's the way it's going to continue. But ultimately, what this article is talking about is the fact that these strikes are the beginning and ultimately not the end. But many have already been quick to question how effective these strikes will be and will continue to be. Now, this follows the US carrying out its biggest waves of airstrikes since the Israeli-Hamas war, which sent shockwaves across the Middle East. The strikes hit 85 targets at 7 facilities, and also continuing a wave of strikes on the Houthi rebels in Yemen. These strikes by the US followed an attack on a US base in Jordan, with this drone attack killing 3 American soldiers, and that was a massive escalation. Obviously, this wasn't done by Iran directly, but by one of Iran's proxy groups based within Iraq and also Syria. And these, are spread across the Middle East, but are primarily within those two nations because, obviously, of the destabilization from prior conflicts. And so we do have many Shia militia groups within those territories, which, whilst are backed by Iran, also are kind of very extreme in their actions, and then also kind of independent in some of the actions that they take as well. And therefore, we see these kind of attacks take place all the time. Now, back-to-back strikes by the Biden administration represents its growing interest in stepping up the responses to these attacks by Iranian-backed militias. Despite the increase in attacks, Biden has reiterated he wants to avoid a regional war. Biden has been under immense pressure to respond to Shia militia attacks, but he is also having to be calculated in his strikes to ensure US troops do not return to the Middle East. That said, the US still maintains certain bases in Syria, Iraq and Jordan, with thousands of troops being stationed in such bases, with these bases now being the target of more than 160 rocket and drone strikes. The US, UK and 6 others have now released a joint statement in regards to the stability within the Red Sea. So, strikes are likely to continue by the US against these Iranian-backed targets within Iraq and Syria. So it'll be very interesting to see how this does play out and how it might affect markets as a whole. It's likely that this will be weighing on those safe haven assets like gold, like we spoke about at the start, but also oil as well, as we've seen so far. So keep your eyes on all of that. Next to talk about is the Bank of Japan. If the article can load up, here we are. Now, the Bank of Japan's officials are growing increasingly optimistic that rates will go positive. This comes following increasing signs the economy is robust enough for such a change. Now, we don't actually talk about the Bank of Japan too much in regards to, those leading economies of the world, those leading developed economies and their central banks. And this is despite the fact that, of course, the Bank of Japan is a very significant central bank to keep your eyes on. And this is because, of course, Japan is one of those leading economies within Asia and has great influence over many industries of the world. And, the Bank of Japan has long run an ultra loose monetary policy kind of outlook and scheme almost in order to kind of deal with its economic issues at hand. But ultimately, it is starting to look like we are moving towards an era where the Bank of Japan will see its interest rates go positive. Now, in regards to other developed economies and their central banks, the Bank of England, the ECB, and the Fed, for example, we have seen in those central banks a move where we've seen, interest rates go from nearly neutral, maybe 0.25, 0.5%, all the way now up to around the 4% mark. And this is largely as a result of those inflationary pressures that we did see following the COVID lockdowns. And from that, we have now seen central banks respond to those inflationary pressures by raising interest rates further to deal with any demand side inflation, really. And, arguably, That's been successful to some extent, as we have now started to see, inflation in such countries start to decline. And that's the key thing that we've been talking about in regards to central banks is, when our central bank interest rates in those nations such as the Eurozone, obviously that's not a nation, but the economic bloc of the Eurozone, the Bank of England with Britain, as well as the US and the Fed. When are those central banks going to start lowering their interest rates? And that's what the key predictions have been around at the moment. But the Bank of Japan, on the other hand, has not really raised rates for a very long time. But whenever we've heard about the chance of rates being raised further, we have seen great volatility on any yen pairs, and that's why it's so important to understand what's going on with the yen and the Bank of Japan. Now, rising momentum for wage increases as well as service sector price growth is creating a more bullish outlook on inflation, which would then require interest rates going positive. This could be a significant change for Japan, who has had interest rates negative rates since 2016. In the Bank of Japan's latest interest rate decision, rates were held at minus 0.1%, but is now expected to be lifted for the first time since 2007. Hints of this move have risen following the Bank of Japan changing its outlook on inflation in a way where now they believe inflation will reach its 2% target, with a Bank of Japan official even saying that the economy is steadily moving in the direction towards a monetary policy revision. These signals, however, did come with caveats that further data is needed to confirm decisions, with data on prices and wages being important to such policymakers. Morgan Stanley and BNP Paribas have noted that rates could increase in March. So some key information there on the Bank of Japan. Definitely keep your eyes on it, as they will be as news in relation to the Bank of Japan will be greatly affecting the yen, of course. We'll be coming to the yen near the end on the charts, so wait for that as well. Next to talk about though is Boeing. Now Boeing in their last chance saloon warns Emirates head, with the head of Emirates Airlines has now warned that Boeing was in the last chance saloon, with Emirates being prepared to send their own engineers to Boeing in order to oversee production lines due to a long decline in Boeing's manufacturing performance. Now, this is all obviously coming following the Alaska Airlines Boeing 737 MAX 9 seeing a blowout from their fuselage, and this was really a kind of worrying situation at the time, and saw a great risk to Boeing stock, as well as many worried whether this was something that was going to be seen across other Boeing planes. But ultimately, this kind of once again highlighted the repeated issues within the manufacturing process for Boeing, and currently federal regulators are continuing their probe and investigation into the incident to try and find out what's going on. And this has created a lot of angst over how this might affect Boeing's stock, which is why it's important to keep your eyes on. Now, this has largely been put down to a long-running issue in the management, as well as governance missteps, whilst prioritizing financial performance over excellence. This has been said by the head of Emirates, Sir Tim Clark, who has held senior roles at Emirates since the 1980s and president of the company since 2003. I am not on it today. Since 2003, Boeing's problems have come to the forefront of airline companies following the mid-air flight blowout of a section of a fuselage on a Boeing 737 MAX 9 aircraft last month. The comments made by Emirates is highly significant, since they are one of Boeing's biggest customers, with Emirates placing an order in November for 95 jets worth $52 billion. Jesus, I can't read at the moment. Clark has said that Boeing has little to no safety culture, with little attention to detail. He has regularly criticized the delays of orders and poor reliability of Boeing. The 737 MAX 9 blowout is still being investigated by federal regulators and has deeply hurt Boeing's reputation. Now, if you were able to understand me there through my stuttering and misreads, ultimately an issue for Boeing is that they're having deep issues within their manufacturing process, and now Emirates is kind of looking at Boeing as, you know, one of their biggest customers, and basically being like, you need to sort this out, or we are going to have to sort it out for you by sending in our own engineers, which will then, you know, obviously oversee your manufacturing production lines and help fix your issues. But this is definitely very important to keep your eyes on, and is very important to the airline industry as a whole. So keep your eyes on news in regards to Boeing. That's all to talk about in the articles, though. To talk about, of course, is the charts, where we do have quite a bit happening going into the new week. Now, firstly, we are on US indices, with the US 30 being one to note. Now, on the US 30, obviously, we've seen a great deal of bullish momentum following price breaking out from this range of where, you know, price was at its all-time highs and was kind of waiting around, not doing much. But since then, we have seen price kind of move to the upside, break out from that range, and, you know, push all the way to these all-time highs, which are, you know, at these levels over the $38,000 mark. Now, obviously, this is very significant for the US 30, as these are all-time highs, and we have seen a great deal of volatility. But ultimately, the reason why we have seen such bullish momentum is, you know, following the change in kind of rhetoric from the Fed, you know, a few months back, where we did hear from the Fed that now they were looking at kind of monetary policy from a more dovish point of view rather than hawkish point of view. And this was largely based off, you know, a few pieces of significant inflation data, as well as, you know, unemployment data and that kind of thing. Interestingly to note, though, last week we did, of course, have some very important, you know, US decisions in relation to the Fed's interest rate decision, and also we did get a, you know, the NFP figure. But both of these figures actually represented kind of more of a hawkish outlook rather than dovish outlook. But despite that, we have seen price continue to the upside. So definitely keep your eyes on the US 30 as we do enter the new week. As we are at these all-time highs, it would be interesting to see whether price can make its way all the way up to that minus 27.2% Fibonacci level. Keep your eyes on US 30. Next to talk about, though, is the dollar. If I can load that up. The dollar, you know, has also pushed higher, and this is following it ranging for the recent, for last week and the week before that. You know, we've seen the dollar kind of range around and not do too much, but following the NFP figure, despite it kind of representing a more hawkish outlook, we did see the dollar push to the upside and just slightly break above those recent highs in that recent range. So definitely keep your eyes on the dollar. Next to talk about is Euro USD, where, you know, Euro USD has kind of just seen a lack of momentum recently, with not too much to kind of note on it, apart from the fact that we have slowly seen momentum fall off, and we've slowly seen Euro USD decline to the downside without seeing much movement to the downside, really. So, you know, that's the kind of thing to note. Whilst it isn't, you know, whilst we're kind of using lots of words to say not too much, not much is really happening. You know, we've got a lack of momentum, but we've got some bearish action going on. So definitely keep your eyes on Euro USD. Next to talk about is pound yen, which is in a very interesting spot after it did react to that 38.20 Fibonacci level, with where, you know, we were seeing a great deal of upside liquidity, which we did note out. And following some significant Bank of England data and the Bank of England's interest rate decision, we did see pound yen move to the upside, which, you know, whilst we've seen pound yen move to the upside, and whilst, you know, pound yen is near its all-time highs, it's important to note that we are now getting increasingly hawkish messages from the Bank of Japan, which could, of course, you know, turn the tide for pound yen, which is at its all-time highs, and force pound yen to the downside as people start to price in the yen having higher interest rates than previously expected. So definitely keep your eyes on pound yen. Quickly to cover is Bitcoin, where we aren't seeing too much happening, but apart from the fact that, you know, price is kind of stalling out and halting at its current levels. Next to talk about is gold. Obviously, the recent world tensions news in relation to the US striking targets within Iraq and Syria has caused gold to spike to the upside, but it does seem that more hawkish data from the NFP figure last week did cause gold to sell off and move to the downside. So definitely keep your eyes on gold. It's in a very interesting spot. Lastly to talk about though is oil, which surprisingly has seen a great sell-off recently, moving all the way down from that $84 a barrel mark, which was a very significant level of course for oil, and now is reaching around the $78 a barrel level. So a significant sell-off to note, and price is now below that 78.60. So of course this is kind of providing a message to us which is more bearish than bullish. So definitely keep your eyes on oil. That's all to talk about on the chart. So quickly to cover is the economic calendar, where we aren't getting too much significant data this week, which is going to be important to note, but we are having some data being released, so important nonetheless to cover. If it can load up, that would be nice, but we don't need it to load up because I do have it down on my notes. So firstly, we will be getting the United States services figure, as well as the Aussie interest rate decision. Followed by that, we're getting the Canadian balance of trade figure, as well as the Chinese inflation rate figure. Another inflation rate figure that we're getting is the German inflation rate figure, and finally Canadian unemployment rate figure. That's all the data though that we're getting this week, which is of great significance. We've got lots on the articles, lots on the charts, and lots on the economic calendar. Hope you have a great trading week, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.